Good evening, and this is Think Construction Services with your latest on multifamily and trends. In today's housing report, we're looking ahead to the 2026 multifamily market outlook, covering renovation costs, leasing demand, and key economic trends shaping the industry. Experts say renter demand remains strong heading into 2026. With mortgage rates still high, many Americans are staying in rentals longer, keeping occupancy levels solid, especially in affordable and mid-tier communities. On the renovation side, costs remain elevated. Material prices have cooled slightly since their pandemic peaks, but labor shortages and wage growth continue to push project budgets higher. Owners are being advised to plan for at least a 10 to 15% contingency on renovation projects and to lock in material pricing early. As for renovation strategy, the focus is on value-driven upgrades, things like modern kitchens, durable flooring, and energy-efficient lighting. These improvements typically boost rent potential and lower long-term maintenance costs. Economists also note that while interest rates may ease slightly, financing will still be more expensive than pre-pandemic levels. That means owners need to be selective, prioritizing projects with quick returns and strong tenant demand. Bottom line, the 2026 multifamily market is resilient but more calculated. Smart, targeted renovations will outperform speculative spending as the industry adjusts to higher costs and shifting demand. For property owners and managers, 2026 is shaping up to be a year of strategy, not speed. This is Think Construction Services, and we thank you for watching. Please like and subscribe to our channel for more multifamily news and trends. Visit www.thinkconstructionservices.com for more information.